Basic structure for somebody that has never traded before, thought about it before, or even been introduced to it before. Now that we understand how a candle is created, we understand a candle is created over time. Over time, you have multiples of candles being created. As multiple candles are being created over time, it creates what we like to call structure. Structure allows us to get a guiding line of the market, whether we're going up, going down, or going sideways over a certain period of time. What allows us to understand if we're overall moving higher? If we say from point A to point B, are we higher or lower than where we started? We can all agree that we are higher than where we started. Over this time, you might not see it, but price action could be going like this. Overall, from point A to point B, we went higher. Price went higher, yes. Now, inside of price going higher, we can see that there was some points where we weren't going higher. And that's okay, because essentially we can look at that like our lives. We can look at that like every day. Every day is not going to be the best day, but if we have a 3-month goal and you're further when you end than where you started, then you got better. The value got higher overall. That doesn't mean every single day went higher or every single day was the best day, but overall price was going higher. So we like to identify the points in the market where price goes in the opposite direction. So what do I mean by that? We can see here, let's pay attention to the blue line. Price was going higher. We hit this point, and then price started to go lower. We go lower, price hits this point, we start to go higher. One thing I forgot to add, always read left to right, just like a book. Always read left to right, just like a book. So if I have this black line, don't start at the top and read to the left. We're always reading from left to right. So now if we look at the blue, where did the blue start? Started here. And we move to the right. Well, can I come here? No, because we skipped this. So we're always moving in the line from low to here, from here to here. Now from here, we go higher. We hit this point, we start to go the opposite direction. We hit this point, we start to go the opposite direction. We hit this point, we start to go the opposite direction. These red circles are what we like to identify. In a uptrend, in a bullish trend, in a trend where we're going higher overall, the first word will always be higher. These points, you have two options. The first word's always going to be higher. The second word is always going to be high or low. That's what we have to figure out. So as we mark this, I'm going to call this a higher high. The reason why I'm going to call this a higher high, when I look to the left, which is where I came from, we are higher than where we started. So now this is a higher high. If this is a higher high, we only got two options. What's the other one? Higher low. Perfect. We have higher low, higher high. Now from where we're at to where this point is this point lower or higher than that previous one? Lower. But if we look at where we started, we're still higher than where we started, correct? Oh, so that could be our new higher low. So now we have higher low, higher high, higher low. Well, now look at this point. When I look at the left, is it higher or lower than this higher high? Well, it's higher. So now what does that make this? That makes this a higher high. As we're moving up, remember the first word is always going to stay higher. Higher high, higher low. Higher high, higher low. Higher high, higher low, and higher high. This is our uptrend. What is a downtrend? A bearish trend, a trend that is going lower overall. If we always have to read from left to right, that means from point A to point B, price needs to be getting lower. So remember, if we're always reading from left to right, well, we have 2 points. This is the left point, lower than where we started. We understand price is not just going to free fall. Inside of there will be times when we're moving in the opposite direction of the overall trend. We can see from point A to point B, we were getting lower. Now, when we look at the blue, we're paying attention to every time price went in the opposite direction. Every time it made a point and went in the opposite direction. This is what's telling the story. How we're getting from point A to point B, the actual direction. If we're going lower overall, the first word will always be lower. Now, we only got 2 options. It's either a lower low or a lower high. So if we're always going lower, then the first point we're starting at is probably a high. So now we have that lower high and we have lower low. Now at this next point, is it lower than the previous one to the left? Yes. This new lower low, is it lower than the one previous to the left? Yes. This new lower high, is it lower than the one previous to the left? Yes. So now we can all agree that we are overall going lower, and these points are overall getting lower as well. These are the building blocks to allow us to see a trend and understand the trend that we're in, and that we can potentially catch and ride the wave and make money as well. If we're not making lower lows and lower highs, or higher highs and higher lows, then that's telling us that something must be going on. Because if we're not going higher overall or going lower overall, that must mean we must be moving sideways, consolidating. Different words that people might tell you or that you might hear, but essentially all we're looking at are these previous highs and these previous lows. Are they getting higher? Are they getting lower? Or something like this. In situations like this, where we're not really doing anything and you're attempting to decipher the code, we'll just go back to the left where we start. Did this low ever get broken? Did this high ever get broken? So if neither one of these has gotten broken, we're not going higher overall or lower overall. We're playing within this range. We're consolidating. This is where opinions are being created. This is when a lot of people lose money, because they're trying to make an opinion if the market is going higher or going lower, and it's not really doing anything. This is when we like to stay on the sidelines. Let's go to a chart. A downtrend. When we're starting at the top of our screen here, we can see as we move to the right from point A to point B, price got lower. As we're following this, we see there was times when it was going up, lower, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and just continue to walk its way all the way to the bottom of our screen. Just like we drew out, the candles are creating those lower highs and lower lows as we continue to fall to whatever our target is. Now, here's an example of an uptrend and price action making higher highs and higher lows. When we start at the bottom of our screen, we move to the right from point A to point B, we can see that we are moving higher overall. But as we break it down, there's higher high, higher low, 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 higher high, and just continuing to go higher overall. Now, here's an example of the market moving sideways. From this point here to this point here, we can see what? We had a higher low and a higher high. After this higher high was made, price came lower, but we are above this low. Price comes back higher, we're below this high. So we didn't make a new low, we didn't make a new high. If I extend a line from that top to that bottom, we can see price action traded back and forth, but we stayed inside of that current range that we were in. And overall, that's telling us price is moving sideways over a long period of time. In the overall scheme of things, the market moves in three directions: higher, lower, and side to side. If we can identify which one is present, we can place ourselves in the correct direction.